Good morning, dear students. I, Professor Basavaraj Koche, welcome you all for today's lecture of Elements of Cost and Market Analysis. In previous class, we have discussed the various cost concepts like fixed cost, total cost, variable cost, average cost, marginal cost. Now we will move ahead with the remaining cost concepts as per your syllabus. In today's class, we shall discuss three types of costs which are important from viewpoint of your examination. That is implicit cost, explicit cost, and opportunity cost. These three things we would be discussing today. First thing is about implicit cost. Implicit cost, also known as imputed cost, is the implied cost that does not take a form of cash outlay and neither is recorded in the books of accounts. These costs, that is implicit costs, are the costs which are not included in any of the book of records, neither they are calculated in terms of cash. So these type of costs are known as implicit costs. Many times these type of costs are not recorded in the books of accounts. These costs are, say, just for a referral study. Neither they are calculated in terms of cash, neither they are recorded in the books of accounts. The opportunity cost is the important example of implicit cost, wherein the expected returns from the second best alternative action is foregone while pursuing a certain action. The implicit or imputed cost can be termed as a cost which results from using the assets of one's own use rather than renting or selling it, or the income is foregone of not choosing to work. Suppose I am having an asset and that asset is being demanded for rent, but instead of giving on rent, I am using that asset for myself. So whatever foregone or whatever rent I have left, that type of costs are treated as, say, implicit costs. These implicit costs are not recorded in any of the books of accounts. The concept of implicit cost can be further comprehended by an example given below. Suppose, here we will take an example. There is a teacher who decides not to utilize her services in any of the education institute. Means one teacher is there and that teacher, take an example, I am a teacher and instead of serving in this college, I will think of leaving this college and taking tuitions. But over a period of time, after taking tuitions or becoming home tutorial, again I feel like shifting to some institute or college. So at that point of time, whatever income I was getting as a home tutor, this loss of salary is the opportunity cost of income for the education institute, and hence this is the implicit cost of the education institute. So these type of costs are treated as implicit costs. They are not recorded in any of the books of accounts. Now the next type of cost is explicit cost. Here the explicit cost, also called as actual cost, is the cost actually incurred by the firm for making all the physical payments and the contractual obligations. Here explicit cost means those costs which are actually incurred by the organization, and the firm has incurred these costs in making all the physical payments and the contractual obligations. The physical payments include the cost of material, labor, plant, equipment, building, technology, advertisement, etc. So all such kind of costs incurred are treated as explicit costs. These costs like labor cost, material cost, plant, equipment, building, technology, advertisement, etc. are the examples of explicit costs. Thus, all the money expenses recorded in the books of accounts are the costs which are recorded in the books of accounts are for practical purpose. The actual or explicit costs are recorded in the books of accounts. Here, this cost comes under the accounting concept, cost concepts. All the physical and easily recognizable expenses incurred are recorded in the accounting books, which are then later analyzed to determine the efficiency with which the firm is operating. So here these type of costs are recorded in the books of accounts, and these records or these entries are further analyzed and checked whether the firm is efficient or not. So these kind of costs are explicit costs. For example, suppose a firm purchases machinery worth rupees 1 lakh, then the amount paid is the actual or explicit cost here. The explicit cost or actual cost involves the direct monetary payment and is paid to the external parties to keep the in-house operations of the business in motion. These operations of in-house, to keep them in motion, whatever the costs are paid, they are treated as explicit costs. The explicit cost is in the form of rent, wages, commission, salaries, etc., which are recognizable and can be easily recorded in the books of accounts. These records or these facts help in determining both the accounting and economic profit of the firm. Further, this information what we have entered or what we are entering is used or further can be analyzed and used for checking whether the organization is running in an efficient way or no, whether the organization is, say, in the running in profits or losses. So whatever analyzing part we are going to do, these type of costs are helping us in analyzing the data or the transactions what we have recorded and check the financial health of the organization. Further, the next type of cost is opportunity cost. The opportunity cost refers to the expected returns from the second best alternative, use of resources that are foregone due to the scarcity of resources such as land, labor, capital, etc. In other words, the opportunity cost is the opportunity lost due to limited resources. The opportunity what we have lost due to lack of resources is treated as opportunity cost. Every firm or every individual has limited resources and having alternative uses with varied returns. Therefore, the resources owners employ their scarce resources in the most productive use with an object to maximize their income, and thus the income expected from the second best use of the resource is foregone. The opportunity cost is also called as alternative cost. Let us see an example. Suppose a firm has a sum of rupees 50,000 for which it has two alternative uses. it can either purchase a printing machinery or photocopy machine, both having the productive life of 7 years. The annual income expected from printing machine is rupees 15,000 and from the photocopy machine rupees 10,000. A profit maximizing firm will exchange its money for the printing machine and will let go the expected income from the photocopy machine. Thus, the opportunity cost of the income from the printing machinery is the annual income expected from the photocopy machinery rupees 15,000. So, these kind of costs, they are, that is opportunity costs, are not recorded in any of the books of accounts, neither they are further analyzed for decision making. So, today we have seen the 3 types of cost, that is implicit cost, which is not recorded in the books of accounts, then explicit cost and opportunity cost. So, these 3 types of costs we have seen in today's class. We shall stop here. The rest things we shall see in tomorrow's class. Thank you. Good day.